Good morning, traders. Good morning. How was your weekend? How was your weekend? Can you hear me? Can you hear me? Good morning, good morning, good morning. Feel so excited to have you in today's session. Good morning. You're welcome. Can you hear me? I want to see your comments if you can hear me. Drop your comments if you can hear me. Can you hear me? 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 You're welcome. You're welcome. If you have a question, drop it in the comment section. If you have any question, if you have any pair you want us to analyze, drop it in the comment section. I believe you can hear me. Let's start today's session by looking at the fundamentals. Okay. Today is Monday, the 11th of Monday 11th of June. There are no major news. No major news today. So we will not see much volatility in the market today. Okay, because there is no major news to drive price. Tuesday, we have just one major news, which is from Great Britain. By 7 a.m., claimant counts change. What is the expectation? The previous is 8.9 and the forecast is 2.2. So if the actual is higher than the forecast, we should expect GBP to be bullish. If the actual is higher than the forecast, we should expect bullishness on GBP. Okay, and if the actual is less than the forecast, we should expect bearishness on GBP USD. That's for tomorrow, Tuesday 11. Then on Wednesday, we have major news coming from Britain and also the United States. So on Wednesday is FOMC. FOMC will be released on Wednesday. So we should expect high volatility on USD pairs on Wednesday. Okay. Should expect high volatility on USD pairs on Wednesday. Between now and Wednesday, USD pairs might just range. Okay. Between now and Wednesday. The institutions are waiting for the FOMC data to be released. So on Thursday, we have Australian dollar and also US dollar core PPI will be released, and also unemployment claims will be released on Thursday. Then on Friday, Bank of Japan policy rate, monetary policy statement, and BOG, Bank of Japan price conference will be released on Friday. Okay, so we should expect high volatility this week. So if you're trading this week, and you apply good risk and money management, okay? Don't go aggressive this week. Ensure you apply good risk and money management. I hope that is clear. So let's do the technicals. Can you hear me? Can you hear me? So we'll start with Australian dollar USD. So let's start with the weekly candle. So as you can see, last week candle closed strongly bearish. It closed strongly bearish, and we had a support level. You can see. You can see this support zone, and last week candle closed below that support zone. You can see it was a support at this level, resistance at this level, resistance at this level. Can you see that? and last week candle closed below that demand zone. That tells me that supply is higher than demand. And when supply is higher than demand, price is expected to go bearish. Okay, so based on how last week candle closed, we should expect more bearish move on Australian dollar USD this week. So my bias for Australian dollar USD this week is bearish. My bias for Australian dollar USD this week is bearish, but we might see price pull back to test this support that has become resistance. Okay, we might see price pull back to test this support that has become a resistance level. Now let's go down to daily time frame. It is possible a fair value gap was created after the formation or after the close of last week candle on lower time frames. So we need to identify those fair value that was created on lower time frames. So let's move down to daily. So on daily, you can see the fair value gap that was created on daily. No fair value gap was created on daily. Let's go down to 4 hour. Let's go down to 4 hour. So you can see on 4 hour, we had a fair value gap here. The fair value gap was created. Okay. You can see the gap in the low of this candle and the high of this candle. That's the fair value gap. A fair value gap is a candlestick price action. A fair value gap is a 3 candlestick price action whereby there is a gap between the first candle and the third candle. I hope you get that. A fair value gap is a 3 candle price action whereby there is a gap in between the first candle and the third candle. As we have it here, this is one, first candle, second candle, and third candle. And you can see the gap in between. So that's a fair value gap. Okay. So price is expected to pull back to fill this gap before going bearish. So if you are considering buying Australian dollar USD, your TP should be around this area. Okay, in between fair value gap, that's where you should set your TP. You could also apply Fibonacci tool. If you don't know how to identify fair value gap, just apply your Fibonacci from the swing high to swing low. Wait for price to pull back to, okay, wait for price to pull back to premium. As you can see, price is at a discount level right now. And you don't sell at discounts. Okay, you don't sell at discounts, you buy at discounts. So if you are considering buying, you should buy. Your TP should be around this area. I hope that is clear. So that's my take on Australian dollar USD. Long term is bearish, short term. If you are considering trading Australian dollar USD today, tomorrow, you should consider buying. I hope that is clear. If there is any pair you want me to analyze, drop it in the comment section. Favor, I can see you. Mrs. Fumi, I can see you. Good morning. Good morning. Can you all hear me clearly? Mr. Ned, I guess it's from your hand. If the network is not, if you can't hear me clearly, I guess it's from your hand. Can you hear me clearly? Can you hear me clearly? If there's any pair you want me to analyze, drop it in the comment section, please. Drop the comment section. Let's move to the next pair. So my bias on Australian dollar USD this week is bearish for the week. Short term is bullish. Short term is bullish. Okay. Let's move to the next pair. GBP USD. So GBP USD, as you can see, a fair value gap was created. Let's start with the weekly time frame. So you can see how last week candle closed. Can you see how last week candle closed? What candlestick pattern is this? This is a shooting star. This is a shooting star, and a shooting star indicates change in trend from bullish to bearish. So based on how last week candle closed, we should be considering selling GBP USD. But after the formation of this shooting star candlestick, I believe a fair value gap was created on a lower time frame. Let's go down to daily. So you can see on daily, there was no fair value gap, but let's go down to 4 hour. So you can see a fair value gap was created on 4 hour. Can you see this fair value gap? Can you see the fair value gap? This is 1, 2, 3. You can see gap in between the first candle and the third candle. That is a fair value gap. Okay. So I would expect that price will pull back to fill this fair value gap before GBP USD goes bearish. Before GBP USD would go bearish, I expect it to come fill this fair value gap before going bearish. Remember, everything in trading is probability, okay? It's probability. Price can just decide to keep going bearish from the current market price. Everything is probability, okay? So if you want to buy, all you wait for is a bullish reversal pattern to form, okay? Now we are expecting price to pull back and fill this gap. But before we execute a trade, we want to ensure that a bullish reversal pattern has formed on any of the time frames. 1 hour, 4 hour. We can't just jump in and start buying right now, okay? Because the last candlestick that closed was bearish candle. Before we buy, we want to see bullish candles printing on the charts before we buy, okay? So long-term, GBP USD is bearish. Short term, it is bullish. If you are considering trading GBP USD today, I would suggest you go bullish on GBP USD, but wait for a bullish reversal pattern to form before buy. I hope that is clear. I hope it's clear. All right, we'll look at GJ. Yes, Mr. Favor, yeah. AUD, I think it's set for buy. Short term, yes, yes. So let's look at the next pair. Mrs. Fumi said we should look at GJ. Let's see GJ. So on GJ, let's start with the weekly time frame. Now, what happened last week? What happened last week? Last week, candle closed as an angry man. This is an angry man, right? This is an angry man. An angry man indicates change in trend from bullish to bearish. But see what played out last week. See what played out last week. Before you open and start selling, I want you to see this. Can you see this support? Can you see this support? Price tested this support and you can see the rejection. There was a strong rejection from that support. A lot of retail traders want to jump in and start selling because what we have here is what angry man, right? A lot of retail traders jump in and start selling. But if you look at the structure on GJ, you would see that structure is a bullish structure, right? The structure is what? A bullish structure. So after the close of last week candle, let's go down to daily and see the pattern that formed on daily time frame. Let's go down to daily. So can you see the pattern that formed? Can you see the pattern that formed on the daily? This looks like a Marubozu candle, which is a bullish reversal pattern. Now, after the formation of this Marubozu candle, if you go down to 4 hour, I'm sure a fair value gap was created. Let's go down to 4 hour. So you can see on 4 hour, a fair value gap was created. Can you see this fair value gap? Can you see this fair value gap that has been created? So I'm expecting GJ. Long term is bullish. Long term is bullish. But before GJ goes bullish, we want to see price fill this gap. We want to see price pull back to fill this gap before you go bullish on GJ. That's my take on GJ. Right now, GJ is bearish. If you are considering taking any trade on GJ today, I would suggest you take a sell trade on GJ. And if you are selling from the current market price has already moved. If you want to take the risk, let's see. Let's go down to 1 hour. Okay, it's still a good setup, right? We had an angry man here. We had an angry man here, and this next candle is an engulfing candle. So if you are selling GJ, I would suggest if you are selling today, let's go down to 4 hour. your stop loss should be 20 pips above this level, above this high. Your stop loss should be 20 pips above this high. So from the current market price to this level, 20 pips above will be 200.15, 200.15. That's about 80 something or 90 something pips. Yeah, close to 90 pips. That risk is very high. So you might want to wait for price to pull back. Let's see after the formation of this bearish candle. After the formation of this bearish candle, let's check lower time frame to confirm if a fair value gap was created. Okay, let's go down to 15 minutes. Do we have a fair value gap on 15 minutes? Okay, so you might want to wait for price to fill this gap. Okay, you might want to wait price to fill this gap before you go bearish. That would be my advice on GJ. Okay, as you can see, price just tested the previous support level. Okay, this support could hold. Okay, this support could hold. So wait for price to pull to fill this gap before you go bearish. If you don't want to take that high risk, that's like a risk on GJ. Patiently wait for price to pull back before you go bearish on GJ. I hope that is clear. And if you are selling GJ, your target should be around the value gap. Okay, this is where you should set your targets. I hope it's clear, Mrs. Fumi. I hope that is clear. Mr. Amuda, I can see you. Good morning, Mr. Ned. Gold, USDCHF, and USD card. Okay, I would analyze USD card and gold. USDCHF and USD card are positively correlated. So I would only analyze gold and also USD card. Let's look at gold. My bias for gold today is bullish. Okay, I'm looking for a buy setup on gold. You can see last week was strongly bearish. After NFP got released, gold went bearish because the news was positive for the dollar. Okay, so you can see Friday alone, gold did over 700 pips, or over 800 pips on Friday. 800 pips on Friday, and that's because the NFP data was positive for the dollar. Okay, so it was strongly bearish, and it created, as you can see on 4 hour, it created a fair value gap. It created a fair value gap. So I'm expecting price to pull back to fill this fair value gap before going bearish on gold. So this week my bias is bearish, okay? But today I'm considering buying gold. So I'm waiting for a good setup, a reversal pattern to form. Hoping this low here, we have a liquidity here that needs to be cleared. Okay, so I want to see them clear liquidity at this previous low. That was last candle for Friday. So you can see they've tried clearing liquidity at this previous low, but they've not achieved that. So I want to see them clear this liquidity before I will buy. Okay, so I think at the moment, this is a trap for retail traders. A lot of retail traders would have entered buy based on what, let's go to 1 hour. You can see on 1 hour, it's been no clear direction. So a lot of retail traders would have been executing buy. And their stop losses most likely will be at this previous low. I want to see them clear this low before I will buy. That's my take for gold today. Buy. Okay? That if this gap does not get filled between today and tomorrow, you should hold your buy trade. Or if you've made good profits, let's say you've made 100 pips or 150 pips, you should exit the trade. I hope that is clear. Exit the trade. So that's my take on gold. Weekly bias is bearish. Today's bias is bullish. I hope that is clear. Today's bias is bullish. Weekly bias is bearish. I hope that is clear. I hope that is clear. So let's look at USD card. USD card. Okay, so let's start with the weekly time frame. It's obvious USD card is bullish. USD card is bullish. You see how last week was strongly bullish. So there's a high probability they would clear liquidity at this previous high. There are a lot of stop losses, buy stops orders residing at this previous highs. So there's a high probability they want to clear this liquidity. Okay, but we should see price pull back. I wouldn't suggest that you go in and buy now. Okay, wait for price to pull back. Let's see what we have on 4 hour. Okay, wait for price to pull back. You can see we have a fair value gap that was created here. Okay, we have a fair value gap here. We had a resistance that was broken, which has become a support. So there's a high probability this will drop price. Okay, so wait for a bearish reversal pattern to form on 4-hour time frame before you go bearish for today's market, please. For today's market, but long term, USD card is bullish. USD card is bullish. I would not suggest you buy right now. This would have been a good price to buy USD card, and the market is currently trading. That's about 90 pips above this level. You don't want to buy at that level because the risk will be too high. So patiently wait for price to pull back, okay, to this zone before you consider buying USD card. I hope that's clear. Is there any other pair you want me to analyze? You have a question? Drop it in the comment section. You watch the replay, Mr. Ned. If your connection is poor, you can always watch the replay. The replay will be available after the live stream. Okay? Any question? If you have any question, drop it in the comment section. If there are no questions, I would have to end the session. Do you have any question? I guess there are no questions. In the absence of questions, I would have to end this session. I want to appreciate you. Now, if you got value from this stream, please ensure you give it a thumbs up. If you got value from this stream, ensure you give it a thumbs up. And also, if this is your first time participating in a live stream, ensure you subscribe. Do subscribe to the channel so that anytime I come online, I come on live, you will receive notification from YouTube. So subscribe. And if you're getting value from these streams, please share the link with your friends. Okay, share the links with your friends, loved ones, those who are interested in learning how to trade. Let them also participate in free classes. Okay, I appreciate you all. I wish you all a profitable trading week. Please ensure you apply good risk and money management. Ensure you apply stop loss on all your trades before you execute a trade. Ensure you know the risk involved. Know the dollar amount you're going to lose if the trade goes against you. And always have it at the back of your mind that trading is a game of probability. Don't become too confident in yourself or in your system. Okay? Ensure you apply what good risk and money management. Ensure you stick to your trading plan. If you do all this, you will definitely make money consistently from the market. Don't try to leave that account. Okay? So if you're on the WhatsApp group, you're on the Telegram group, you can always drop your questions on the WhatsApp or Telegram group. I wish you guys a wonderful day. Bye for now.